Hello everyone, welcome to Microwhale. My name is Roland and today I'm going to talk with you about adapting my strategy in crypto, and I will share with you my mistakes and my successes, and hopefully we can learn together from them. So the theme of this video will be exchanging brain cells for money, and I hope this will become clear why I chose this theme. So we will first focus on mistakes because we can learn better from mistakes than from successes, because otherwise we have survivorship bias. So let's just get right into it. So mistakes are made in crypto, the biggest ones, were too much diversification, futures trading, and being too lazy and too slow. So the first one is I had a conviction. Right, I had a good play. I found a good project, or like maybe I have a good narrative, for example, an avalanche ecosystem. But why am I only allocated 30% to it when I could be allocated maybe 70% to it? Of course, that's higher risk. But if I look at the past, every time I had a feeling that okay, this is something that could make me really lot of money, I didn't act properly on it. I should allocate more capital to these kind of things. Also, I spent a lot of my time trading in the past couple of weeks and months, and honestly, I think I've only lost money. Maybe I broke even or made a little bit of money, but I'm just not a good trader. I don't know, maybe I'm too greedy, or maybe that's just not for me, or maybe I just have to learn with smaller stakes. But for me, I can only say trading just ruins my stack, and it lets me, it doesn't allow me to focus on the future, which I have to do in order to anticipate what is coming and where to allocate capital. And because I'm only focused on the charts, and you will not see a 500, 600% move on a chart, at least not very often. So rather what I'd like to do is I like to find investments on CoinGecko, which I think have a low market cap and co-op. So yeah, diversification trading, and also just being lazy, being too slow. Like sometimes I have an idea and I think about it, and then I'm like, all right, today I worked a lot of hours, or I'm tired. I'm going to do it tomorrow, and then the coin is up like 50%. And I can't tell you how many times this happened. And in traditional finance, yes, you have to take your time. You have to think about these things, and you have to analyze stocks and check out competitors. But the thing is, in crypto, if you take this all the time to figure out if this project is worthwhile, you will probably miss the opportunity. So if you're still thinking about, hey, should I invest in this coin or not, but you generally have a good feeling and you understand the basics of it, but not like the fine details, maybe just start slow. Just allocate a little bit of it. This will also motivate you to learn more about the project. And for me, it's just like so many times where I think I had an idea or our thesis, and then I just didn't follow quick enough. So that's very important, to just act when things arise, because crypto moves incredibly fast. Even if you only miss like 1 or 2 days, this could mean like X's in gains sometimes. Other mistakes is also like towards it is just not following conviction, or the other way around is not forming a thesis at all. So for example, during the bear market, honestly, like I had a thesis before the bear market came, which was like, okay, when the bear market came, like when the bear market comes, I have to estimate, all right, have the fundamental changed. And I'm talking about like the 2 or 3 month bear market we had right now, right? And and I wasn't able to really form a thesis because I was too emotionally involved in herd mentality. I spent so much time on Twitter, and when you're constantly like reading all these tweets, and I was trying to learn from them, but what happens is like Twitter has this algorithm that reinforces your bias, right? And it doesn't really allow you to think for yourself. And especially the people who make the most amount of money in the markets are definitely not the people who just follow the crowd. It's the people who do the opposite. When everybody is euphoric, you should be the person selling. And if everybody is bearish, you should be the person buying. Pretty easy, pretty obvious, but still very hard to do. So I think crypto Twitter can be a very, very great tool to help, and I think now I found a good way to interact with it. But back then I just was so just drawn in by the herd mentality, and you don't make money by it. You have to be a lion, not a sheep, okay? Then also, goddamn, underestimating left curves. I looked at Dogecoin when it was like at 1 billion market cap, and I looked at the website. I was like, this is an absolute joke. Like, I think I had a order for $500, and I canceled it. This $500 would have been like $60,000. So I think this was the worst investment decision of my life so far. I mean, apart from not selling at 60K. But yeah, just the power of memes and network effect is so big in crypto. It's just the most important thing of everything. Like, even if you believe that a project is absolute dog shit, like if there's a community behind it, if there's a meme behind it, this thing will probably outperform your whole portfolio. So yeah, I mean, for example, about ADA, right? And when I came into ADA, I looked at Charles Hoskinson and I found him very, very interesting. And I think the things he said about crypto were very cool, right? And there's this vision of the future. And I looked into Cardano and I think it has some very interesting architecture. I still do. But the thing is, I thought it was just insanely overvalued, even at 30 billion, because there were no smart contracts. And of course, it's very decentralized, right? There's a big network effect. And for many people who are in Cardano, they say it's money. Not focusing on Cardano here. Basically, my point is that I underestimated the network effect because I was too focused on the fundamentals. And yeah, now coming to the last points is being too serious. Just have some fun, buy some meme token, don't put your entire net worth into it. But yeah, just being too serious and only focusing on the fundamentals will not get you far in crypto. You have to look at other ways to gain advantage and gain alpha, I think, in crypto as well. Like maybe that's a good advice in general. I don't know. Of course, none of this is financial advice. Just me sharing my opinion and talking here. But yeah, just being too serious, and also the fear of not making it. I heard this actually from on Twitter. He's called @infinitum, and he made a YouTube video with some other guys. And he was saying in crypto, like we have all these memes about like we are all gonna make it and so on. And if you're selling, basically, you're selling your dream of making it. And he said this, and I was like, God damn, that's so on point for me, and I think for so many people, like when we were selling at like 60K Bitcoin. Because, yeah, the signs were there. I saw the signs, but I was too married to the idea, and also I told all my friends about crypto, what I'm doing, and then I couldn't detach myself from this idea. And yeah, I was basically telling to myself, I know it's completely emotional, hey, if I'm going to sell this, I will not make this. Like the 2x, 3x I want to do from here will not be possible if I go into stablecoins, right? So yeah, my advice, just focus on the process and not on the end goal. Also comes with being greedy. All right, enough of the mistakes. Now head over to successes. This will make sense later. Oh, God damn it. Okay, so now we have successes. So now I'm going to talk with you about the things that made me the most amount of money. So yeah, studying second and third order effects. Crypto moves fast, right? And I think the best bet I made was basically on Matic. I think I bought it at like a couple cents and it made like, I don't know, 60, 80x, whatever from there. So made me tons of money. And the reason I got to Matic was just I looked at, okay, what's going on Ethereum at the moment? Everybody's talking about high gas fees, right? What's the next play? Well, the next play is obviously something to scale Ethereum to have lower gas fees. Anything that has lower gas fees with all the Ethereum applications. So there was Matic. It was so obvious to me. And yeah, that's how I made a lot of money. And I think you can view this in so many different areas as well. Like if you only say, oh, okay, I think Polkadot is going to moon soon. So what's going to happen? Well, if Polkadot is going to outperform the rest of the market, probably there will be some high beta plays in the Polkadot ecosystem, right? Or something new launches, like for example, Avalanche. So what happens if new projects will come onto Avalanche and people want to buy them? Well, how are these products going to be launched? Well, maybe on a launchpad. So what's maybe a very intelligent play would be to buy the launchpad token of Xava, right? So yeah, that's just studying second and third order effects and really thinking about what will happen in the future and then being early, right? Also, just every time I concentrated my portfolio, right? Just when I had very good ideas about what I'm doing, and this comes from conviction. Like maybe there's I'm a bit more on the emotional or intuition, more side of intuition. I don't know. Probably hedge fund managers would disagree with me, but I think if you're really, really certain about something, and you spend a lot of time, and you really also like you have like also your bearish case and the bullish case, and you really understand something, and you think it will outperform the market. For me, at least, I'm usually right in these kind of things. So for me, it was the best way to just concentrate my portfolio. I learned this the hard way last year when I told all my friends about Tesla in like, I don't know, at a few $100s, and then only allocating 10%. Why? That's just stupid. So yeah, concentrate your portfolio heavily if you know what you're doing. At least that's my non-financial advice. And yeah, other than that, letting the narrative play out. Just not cashing in early, not saying, okay, it's a 2x or 3x, I will cash out. No, just focus on the fundamentals here and the network effects. Do you think it will grow? And for me, it was like, okay, if I think the narrative has played out, I will withdraw my money. For example, with Avalanche, I still think it has some room to grow. And yeah, I will wait for Sushi and Curve to come onto Avalanche and let the narrative play out. And then I will withdraw my Avalanche funds. And yeah, then the next is finding small caps with great narratives. So for example, I looked at Ergo. Ergo is a small coin, also working together with Cardano. And I was looking at what other coins does Charles Hoskinson find interesting, and I found Ergo, which is like such a small coin. And I looked at their like technical. They had like a video where they just talked about the technical aspects of Ergo, and I couldn't understand anything. So I thought, hey, this might be huge because I don't understand anything. They might be onto something here. So yeah, I just thought they had very great tech and was a committed team. And yeah, I knew that when Cardano will catch on, probably Ergo will catch on as well. And also, I think I made like 10, 15x on Ergo there. And also, I could have made way more money if I would have concentrated my portfolio more. Yeah, and so important is just trusting myself and cultivating my own thoughts. When I was starting out in crypto, I was not on crypto Twitter. I was reading Multicoin Capital's Thesis, for example, and I was looking at all the different hedge fund pages and what they are doing. And I was looking at YouTube, but in the end, I was thinking for myself, right? And then, like during the 60K area, I was like drawn in by Twitter and like following herd mentality, and then I couldn't sell, and I made bad financial decisions just because I couldn't think for myself anymore. Now I'm very glad I'm back here again. But yeah, it's very important to just always think for yourself, cultivate your own thoughts, and follow them. And yeah, also just betting on network effects and cults. Man, I mean, Cardano, for example, is just like the biggest cult, right? Just as Bitcoin, Maxis, etc. And the best bets are made in these kind of things, just betting on network effects. So for example, we have Elliot Trades and Alex Becker, right, talking about NFTs and about gaming. It doesn't matter if they are right in general sense. It really doesn't matter if these games will do good or not, like fundamentally. What matters is they have huge communities. And if something just looks good, even if I am pretty certain that it's a scam, if I believe, okay, there are so many stupid people in crypto who want to make money, they will buy this. So I will buy it and front run them. So yeah, maybe not such a nice way to put it, but I think that's a way to make money in crypto. All right, now let's move on. We have the mistakes, we have the successes, and now we're going to come to my future strategy. So I'm going to focus on concentrating my portfolio and rotating it rather than diversifying it. So I'm going to try to follow narratives and communities, narratives with strong communities in the best case, and allocate my capital there. So at the moment, this is Avalanche and this is gaming and also NFTs, but I suck at NFTs, so I'm not touching that. And yeah. Also, being early, not being lazy. So I will, for example, I will buy probably some Viper, which is a decentralized exchange on Harmony One. I don't really believe in Harmony One, but I do think that there's some potential, and if this catches on, like there will be probably some huge outperformance. And yeah, forming a thesis. So for example, my thesis for Avalanche is, well, I think there will come liquidity incentives. This will incentivize money markets. This will incentivize a lot of capital being brought onto the ecosystem. And I mean, how much yield are how much capital can go onto Avalanche until people are satisfied with their yields, right? So for example, now there's like 700 million in incentives on Avalanche when the whole rush system is getting rolled out. Sorry for my English here. Let's say, okay, people are satisfied with 10% yield. This means that at least 7 billion could come onto Avalanche to still satisfy that if it's all allocated. But most of the time it's not. So yeah, there's still like lots of room to grow for Avalanche. And just forming a thesis and following it. And focus on small caps. Man, I mean, of course, like some big caps can also like rise in value and you can make lots of money with it. But also like just small caps who have like 8 million, 10 million, like they can easily go to 100 million sometimes, right? So yeah, I'm focusing on them and trying to concentrate my portfolio in like very good small caps that I believe in. If they're not audited, if they're very new, I won't put too much money into it just because the risk of getting rugged is still pretty high with a lot of them. But I do think that's a risk worth taking. And yeah, then this will basically wrap it up. Just assimilating the mind of an irrational maniac sometimes and just going YOLO, right? If you're like a right curve person, right, and you're thinking about all these things rationally and what's the most fundamental play and okay, what will the future look like in the next 2 to 3 or maybe 5 to 10 years, and what will be the remaining architecture? This doesn't matter. I mean, you can make money that way. And in the long run, maybe you will even outperform people because a lot of people will get shaken out in the bear markets, etc. But crypto moves incredibly fast. At the moment, when there's a narrative at the moment, and it's still not in the end, for example, I do think that gaming has still some room to grow. There are so many axes to be found there, right? And just focus your capital on this. Even if you don't believe in the future and you don't intend to hold them for longer than you need to. But yeah, just going more concentrated in these bets, I think is the way to make it in crypto. I really have to learn this for myself, so that's why I'm talking about it, because like when I'm investing in stocks, I'm not following this route. But I think in crypto, you really have to just YOLO sometimes and just think irrationally. Okay, this is a meme, people will love it because it has a stupid name, whatever. So many times this strategy works. So yeah, basically my inspiration, what I want to be like when I grow up, is a mixture of these two guys. Just a chat who's rotating, so the rotator chat, and yeah, I just thought this was a very funny meme found on Twitter, and of course this is Giga Chat. Yeah, so my strategy is just to be a little bit more rational and taking on more risk, not by trading leverage position because I'm not good at that, but by focusing my portfolio and then rotating it into different plays. So yeah, that's what I'm going to do here. Let's hope that the bull market is not over yet. Otherwise, I might regret these decisions. But yeah, that's what I'm going to do. None of this is financial advice. This is just for pure informational and entertainment purposes. But I hope you found it very interesting. If you had any ideas, inspirations, or thoughts about this video, please leave them below, and I would be happy to talk with you. And also, I would very appreciate it too if you would drop a like and subscribe. It helps me grow my channel and motivates me to continue this. So yeah, hopefully see you soon, and thank you for watching.